Hey everyone, my name is Brendan and welcome back to the Crypto Analyst channel. I hope all of you guys are having a great day no matter where you are from, because we just had major news get released from JP Morgan saying that the current crypto deleveraging cycle that we're experiencing right now might not last much longer. So we're going to dive into this and explain exactly what this means and why they're saying this, alongside a couple of other very important articles like Meta beginning their testing for NFT integration on Facebook, and one of the greatest fire sales that the crypto world has ever seen, which is FTX closing in on a deal to buy BlockFi for only $25 million. Now, to put this in perspective, BlockFi, when they were last evaluated, was at an almost $5 billion evaluation. So the fact that they could go to FTX here for $25 million is absolutely breaking news. And of course, we have a lot of Coinbase news. Coinbase is adding support for Polygon and Solana transactions, and they're also in the process of merging their USD and USDC pairs amongst all this stablecoin craziness. But this is actually a bullish thing in disguise, in my opinion, and I'll explain why in this video. So of course, if you are interested and want to learn about the technical analysis as well, make sure you stick around for the entire length of this video, as there will be important information discussed the entire way through. But with that being said, let's go ahead through a couple of these news articles, get into the technical analysis, and then wrap back around here at the end and finish off what's happening in the news, because there is a $100,000 bounty for one of the FBI's top 10 most wanted, who just so happens to be a cryptocurrency Ponzi enthusiast. But to start things off, JP Morgan says that this current crypto deleveraging cycle might not be lasting too much longer over here. They go on to say that a lot of the things that are happening with people like Celsius and Three Arrows Capital is a manifestation of this deleveraging process, and that this whole cycle that we're experiencing is not something that is going to be a very extended process, meaning the rapid rate that you are seeing lending companies and DeFi companies and just crypto companies in general, I guess seeing the kind of volatility that they're experiencing isn't going to be a prolonged event. Now, this doesn't mean a bear market can't be prolonged, but the series of bad news and the chain of bad news that we've received in the past couple of months is most likely going to come to an end soon. The main reason that JP Morgan said this is because that there's strong cryptocurrency entities, and I want to highlight this, but they say that the fact that crypto entities with stronger balance sheets are currently stepping in to help contain this contagion. Essentially meaning there's a lot of still strong crypto companies that are out there, and they are now stepping in, like FTX, and we'll talk about this in just a moment, but they are now stepping in, the companies with these strong balance sheets that are very healthy, even in a bear market. They are the ones stepping in and saying, all right, enough's enough. We'll bail out who we need to. The people who really messed up, you're going to have to probably just, shrivel up, and that'll be the end of you. But the ones that they see worth saving are kind of coming to the forefront. Now, one of those is FTX, a massive giant who has made it very clear, much like Binance, who have also made it very clear, but FTX especially, saying that they have a lot of funding that they want to deploy and they want to be purchasing other crypto companies. And it looks like the first one on that list is going to end up being BlockFi. This is almost closed. It's almost finalized. And the big news here is because, number one, this comes after FTX provided a $250 million emergency line of credit to BlockFi while they were panicking and in need. This deal is expected to be closed by the end of this week, but most importantly, they were last valued, and I want to find it somewhere in this article, but they were last valued at about a $5 billion evaluation, or it's $4.8 billion. Is an incredible sum of money, which they have now been brought down to simply just $25 to maybe $50 million at the high side. So there's still a little bit of debate about exactly how much BlockFi wants to go for, but the main reason for this being that these investors in BlockFi are simply just out of cash, and they are willing to take a loss on this position and a loss on the company knowing that it would be going to good hands and that they would be getting at least a little bit back in return. Now, granted, a lot of these people probably didn't invest into BlockFi at a $5 billion valuation. They probably invested it when it was a lot smaller, and then grew it to that evaluation. But, this is where it was talking about this. The source said that it was last valued at $4.8 billion, according to PitchBook. So, quite the fire sale in the world of cryptocurrency. To my understanding, this is the biggest fire sale that I think I've ever experienced. A $5 billion evaluated company going for maybe $25 million is a wild number to think of, because $25 million is really not that crazy for a company the size of BlockFi. I mean, $25 million is something that a lot of different funds can put forth. Anyway, on to our final set of news before we get into the technical analysis and wrap back around over here. Meta is now beginning their testing for NFT integration on Facebook. Now, I know what you're thinking. You're probably saying, hey, I don't care about NFTs at all. I'm strictly a crypto guy. But the reason that this is impactful is because crypto and NFTs are really two sides of the same coin. They're both very integral parts of blockchain technology. They're very popular. I would say that the most popular forms of blockchain technology come through cryptocurrencies and NFTs. And typically, NFTs are created on crypto's blockchains or crypto's layer ones, like Ethereum and Polygon and AVAX and so on and so forth. There's a lot of, I feel like every layer one now has NFT compatibility and smart contracts. But what they're essentially saying over here is that you'll now be able to use these blockchains, not just send Polygon back and forth, but you'll be able to actually use the blockchains themselves and have forms of something like USDC on Polygon or USDC on, I just realized I think we're on the wrong article over here. But the reason that this is significant is that you'll be able to send stuff like USDC on Polygon and Solana and other stuff like that. But let's go ahead and talk about what's happening on the chart over here, because we saw a wild, and I mean a wild end to yesterday. Now, the main reason that I said we saw a wild end to yesterday is because of these couple of wicks that we had over here. So what ended up happening is Bitcoin broke below this $20,000 support area, and after breaking below here, it came down all the way down to about $18,500 and then rapidly bounced upwards. And I want to measure this out because it rapidly bounced upwards about maybe 12.5%. And then following this 12.5% rise, it was looking really good for Bitcoin. But immediately afterwards, it started immediately selling off again and coming back down. So now Bitcoin came all the way back down into the $18,000 range again, which it is now pumping since that point. So Bitcoin's now back below $20,000, but it was a little bit of a wild ride. So if it can mark the higher swing low here, that would make a pretty good argument for Bitcoin. Granted, it still has a lot of resistance, and I don't like this kind of rejection wick, especially after such a big green candle. It just doesn't look great for Bitcoin. So lower swing highs and higher swing lows. I would imagine that Bitcoin is eventually going to get itself into a squeeze in the zone, and I think we're really well on our way to forming one. So if you are a technical analysis guy, watch out for any kind of a squeeze here. Maybe if we can keep this resistance level pretty stable around $21,500, it's possible that we set up some sort of ascending triangle for a reversal. However, that's really just kind of a far-fetched theory at the moment, especially with a rejection candle like this one coming in. So I would imagine that Bitcoin ends up getting into some kind of a squeeze like this, maybe a pennant forming, which now that I'm drawing this out could actually look more like a bear flag than anything else. So maybe we see something like this happen, and if that happens, it would be a bear flag, which could very likely break out to the downside. But if you guys want to get more of my technical analysis in more detail, definitely check out the link in the description down below for for Crypt Nation, which runs in Mighty Networks. But it's a really cool place, and again, you get access to me and a bunch of other analysts, and we make a lot of great content in there in Crypt Nation as well. So let's get into what's happening over here on the Coinbase merge. Now, with Coinbase merging their USD and USDC pairings, there's a lot of people freaking out. I saw a FUD that Coinbase is telling people to get out of USDC and that they don't trust USDC anymore. hence why they're merging the order books, which just, from what I could find, I couldn't find anything proving that. In fact, I found the opposite, saying that they're doing this in order to create a deeper liquidity book. Now, why would they merge these two? Number one, for liquidity, but number two, they are one of the few stablecoins that has been able to prove, or quote unquote prove, that they are 100% backed in cash or cash equivalents, meaning that for every one USDC out there, they have $1 on standby in reserves that can be redeemed at any point. So in theory, if someone owned every single USDC, they could hand that off to Coinbase and receive however much money that is in market cap back in return in United States dollars, like the physical fiat version, not the crypto version. But Coinbase is saying we have all the dollars to represent this. All that USDC and USD are two sides of the same coin. One's a fiat version of the US dollar, one is a electronic or a crypto version of the US dollar. It's the same coin, two different sides, so why would we have two order books for the exact same pairing, essentially? Meaning that if you want to go buy Bitcoin with USD or USDC, it's going to cost you essentially the same amount of money no matter which one you buy it with. So they're saying that they view this almost as the same fiat or the same crypto. They're the same thing. They're worth the same thing. They have the same cash backing. So why make two pairings for the same crypto? Just didn't make sense, and it brought liquidity away from some of these pairings. So in order to give liquidity back, they're going to be merging these pairings. That's actually a pretty smart idea. Now, one of the things that we're actually going to be talking about in the Crypt Nation newsletter is I don't imagine them. This is a little bit of a sneak peek, but I talk about this in depth in the newsletter that I don't imagine Coinbase doing something like this to other stablecoins, because USDC is the native stablecoin of Coinbase and Circle, and I think that's the real reason why they're doing this. And any kind of other exposure to doing this to another stablecoin puts them under risk of whatever that other project or company does. Meaning if another company decides to pull a UST and they were offering the same kind of liquidity transfer, that would put them at risk. And why take a risk on something that you don't control, right? Now, in the final set of news, the FBI is offering a $100,000 reward to help find the OneCoin crypto queen. Now, she is Bulgarian born. I believe she is a citizen in Germany now. And the FBI has put a $100,000 bounty on her head. I mean, I say bounty. That probably sounds bad, but you get the point. They have a $100,000 reward for helping the FBI find her and turn her in, because she was part of or maybe even in charge of one of the largest crypto Ponzi schemes that we've seen, costing investors over $4 billion, which is an absurd amount of money. So with that kind of money happening from the course of, I think it was 2017 to 2019, this OneCoin crypto queen is now on the FBI's most wanted. So if that is the kind of thing that you're into, consider helping out the FBI. And if it's not, it's still a pretty cool article nonetheless. Probably not the best thing to have a crypto scammer on the FBI's top 10 most wanted, but that's where crypto's getting to. Crypto's starting to become a major economic player, and if governments didn't take it seriously, and if the world wasn't accepting it and it wasn't growing, this kind of thing couldn't happen. So it's a cool article because of the stage that crypto has been able to reach. It's an unfortunate article because this happened to crypto, but the amount of times that this has happened to every other market in existence, it was bound to happen to crypto eventually. But that's going to go ahead and sum us up for this video. I hope you all did enjoy. If you guys did like this video, make sure you guys drop a like, drop me a comment, and consider hitting that subscribe button if you guys want to see more content like this one. I make about 2 to 3 videos every single week, and the content keeps coming. So I do appreciate everyone that is able to watch and help support the channel. But once again, thank you all for watching, and I will see you all in the next video.